businesses started approaching us and they told us, wait, when I'm selling my couch, I can accept payments in credit cards within minutes. But when I want to accept payments as a business, it takes me 3 weeks. I need to work with two different or four different vendors, uh, and it's really complicated. Can you help me out? And that's where we took the entire infrastructure we built for the secondhand websites and just pivoted completely into small businesses. Within 6 months, we had more small businesses joining our payments service than all the credit card companies in Israel combined.
Welcome to 20-Minute Leaders. Just sit back, relax, and learn from the leaders of today. It's a journey. Each one is different, unique, inspiring. Let's get started. This episode is powered by J Ventures, a community-driven VC fund in Silicon Valley, in partnership with Tech, and sponsored by Homeward Ventures, Hippo Insurance, Upwest, Hillel at Stanford, Leap, and Birthright Excel, and in media partnership with CTech. Welcome to another episode of 20-Minute Leaders. Today we're going to be talking about the financial services sector to micro businesses. Meet Adam Kogan, co-founder and head of Product of PayMe, an Israeli FinTech company providing financial services to micro businesses. PayMe is his third company since leaving the military as an officer in the military intelligence. Adam Kogan, welcome to 20-Minute Leaders. How are you?
I'm great. Happy to be here. Thanks for having me.
Thank you for joining me. From the PayMe offices. It's an interesting story in the Israeli ecosystem, and the story that I'm excited to be told, and I'm excited to follow with you on your journey and understanding a little bit better why you did what you did and how you positioned PayMe currently as an amazing company generating tens of millions of dollars of revenue, but actually just raised and only $150,000 in bootstrapped and a lot of lessons to be learned along the way. And so, Adam, what I'd love to hear from you in these 20 minutes is take me through your journey, from the lenses of you as the entrepreneur. Walk me through some of the experiences, the milestones, and what you learned from them. And I'll, of course, stop and ask questions along the way, but please get started.
Sure. So in 2014, I was a young officer in the IDF in military intelligence, and I was ready to conquer the world when I left the army. And my commander in the army actually introduced me to his best friend, my current co-founder, Adam Kima. And it was love at first sight. Basically, I thought I was smart, successful, and had a lot of abilities, and it turned out how far from the truth that was. And that's where the connection was made. We just wanted to find things we can do together. He gave me the idea for my first startup, which was Paymates, which was basically very similar to Paybox when purchasing a vacation or a gift, how to split it between a few friends. That was a complete failure. And from that came PayMe. So PayMe was another idea. The initial idea of PayMe was to go on sites like Yad Win-Win, Craigslist, and basically add credit card payments when you want to sell your bike or your couch instead of it being by check or by cash. So within 3 months, we didn't know anything about anything, basically, but we convinced the largest credit card company in Israel to launch a project with us. So we launched with Isracard on the Win-Win website. So basically, anyone who wanted to sell any secondhand item could immediately accept payments. So that project launched very quickly, and it failed very quickly. So 14,000 shekels, I think that's like $3,000. Within 2 weeks, about 2,000 of that was fraud. So that was the hello and welcome to payments for us. Uh,
Amazing.
so from that point, the new PayMe was born when we didn't know what to do. But businesses started approaching us and they told us, wait, when I'm selling my couch, I can accept payments in credit cards within minutes. But when I want to accept payments as a business, it takes me 3 weeks. I need to work with 2 or 4 different vendors, uh, and it's really complicated. Can you help me out? And that's where we took the entire infrastructure we built for the secondhand websites and just pivoted completely into small businesses. Within 6 months, we had more small businesses joining our payments service than all the credit card companies in Israel combined. So, from being very, very bad at something, we did okay.
Wow, incredible. And so walk me through, growing as PayMe, your decision to bootstrap, what you've learned along the way, and what were some of the interesting insights you learned about, growing a startup within Israel that might not be so trivial.
Yeah, so our journey was, I think, unconventional for a start. I think, well, what we did was we were very, very focused on a specific segment, which was and is small businesses, those 0 to 4 employees. That is, they're basically 92% of all the businesses, they're 50% of the GDP, and they're probably the most overlooked and underserved segment of the entire economy. What we did is we focused on solving their problems. We started off in payments, then we transitioned and expanded into financing. We expanded then more to invoicing, value added services, really solving the entire ecosystem for that small business. What's I think unique about our business model is we don't sell to businesses directly. We sell to organizations that sell to businesses. So, for example, we partner with Isracart, with Wix, with Zap, with iCount, basically CRMs, invoicing companies, website builders, organizations that work with small businesses. And using our platform, they can incorporate financial services into their offering. So Wix, for example, instead of just giving you a website, can give you a payment solution, an invoicing solution, a financing solution, all under the Wix umbrella. So they get a much better value proposition. They generate more revenue from each of their merchants. And obviously, it's better for the merchants since they have everything all in one place. So that was really our story. We started off in the Israeli market, and each year we said, okay, we're just uh, going to get to this milestone, and then we're going to expand globally. But
But
since we decided
I'd love
not
for
to
you to
create,
also pause and
yeah,
reflect on this idea to bootstrap, because when we're looking at the ecosystem today, and obviously we're talking about a different time, but the ecosystem is centered around this idea of venture capital funded companies that are
yeah,
with the immense competition that companies have to raise capital early on so that they have a lot of runway and can grow exponentially. You decide to go a different route and to bootstrap it with only $150,000 in venture capital investment or in investment in general, where today the average seed company, I believe, raises anywhere from $3 to $7 million, right?
yeah. So you're absolutely right. We definitely chose the road less traveled. I think um, one of the main initiatives behind that was we saw a lot of our friends that raised funds and they raised seed rounds and A rounds, and basically they gave up control of their company. So I had one of my friends from the army that was fired as CEO from his startup. We had other friends that suddenly had a very demanding board that actually interfered with the company's day-to-day performance and decision making. And I think it's important to understand that investors are not always aligned with what's best for the company, because, and it makes sense, they have their own priorities. I think for us, we knew we wanted to do a very large round when we wanted to expand globally. So we chose not to do the smaller seed rounds and A rounds and B rounds. And instead, we said we have the ability to actually raise money on our terms, and we're willing to pay the price. We're willing to progress slower, we're willing to finance the progress of the
Very cool.
company from revenue. Time will tell which strategy is best. We every year we still think what's the right decision for us. I know we're going to raise a substantial amount, a substantial financing round in the next 6 months to a year.
Wow. And so, dwelling on this a little bit, what does this allow you or force you to do? Because on one hand, it sounds to me like that just the simple sentence of saying we're operating based off of our revenues, it sounds to me like there is implications on focus, there is implications on the need to find product market fit, but one that actually generates money at the end of it, and not just one that looks good on a PowerPoint deck. What are some lessons that you learned through this bootstrapping behavior?
Um, so as a bootstrap company, there are very unique challenges. Um, you don't get the opportunity to make bad judgment calls. You need to be very, very precise. You can't experiment. So you can have 10 options to experiment from. You need to select two and then go with one. You don't have the funds to bring in the best, most talented people that are former vice presidents at Google and Facebook. You have to hire for potential. Very, very unique circumstances for a bootstrap company, and your decision making does not optimize for growth. It actually optimizes for generating enough revenue to making payroll, generating enough revenue so you can grow in another one, two, three, four team members. It is very satisfying, but really the difference between a standard business and a startup is basically the potential for scale. I have yet to find a way for us to scale without a significant investment of funds. But the question is, at what point?
Right.
So if you do that large financing round in the beginning, you are giving up a lot of equity. You are giving up a lot of control, and that's not on your terms. If you're doing that financing round at a later point, I can tell you from experiences right now, that's pretty much um, offers that are much more catered to your needs and your desires, and you're in a much better position to be in control of the financing round when you're raising to grow and not raising to survive.
Right. So as you were going along the way, what challenges did you have by not raising capital that as a bootstrap company said, maybe I should have just raised those $3 million seed like all of my friends, and I didn't, and I wouldn't have to worry about all this stuff.
So probably the most basic ones. You can't lose customers at all
Right.
because they're paying for next month's salary. So you a lot of times when a customer has a specific demand and they need a specific development, you have to do that. Otherwise, you're going to lose that customer. Um, so it's a challenge. I won't lie. I think the upsides are very very clear. Another example is, as I said, when you bring in a new employee, you have to compensate them in a way that in a way that a company that would raise a lot of money, they would have probably offered a very high
You have
compensation
to be
from a
competitive.
salary perspective. Yeah, exactly. So you need to find other ways to compensate them. So whether they're connected to your mission or they get stock options, which is another option. I think one of the biggest challenges, and I'm probably not surprising anyone, is raising and getting talent to join your company. Companies that raise hundreds of millions or tens of millions of dollars get exposure. They get that brand recognition, and talented people want to work for a company that's, first of all, successful, global, growing rapidly. And if you're none of those things, but you have a lot of potential, it's a hard selling point.
Right.
So I think recruiting talented people has always been a challenge. One of the reasons that we're putting in more effort right now into building brand recognition is so we can recruit the very best.
That makes a lot of sense. Now, tell me a little bit about, what you mentioned before we started recording, that one of the big lessons that you learned is about the Israeli market. And, as an Israeli company, you're obviously, you're the first sales happened in Israel, but then you have to decide at some point when to expand outside of the Israeli market. And you mentioned that point and decision is not that trivial, and one that maybe looking back, you would have done a little bit differently. Tell me the lessons you learned from that.
So getting back to the implications of being a bootstrapped company. Um, After about 3 years in the Israeli market, we started having, let's say, overtures into Europe. So we started talking with European banks, with European potential partners. And the problem was, it was basically me getting on a flight and having some meetings with them. Later that day, I had to go on my computer and actually work with the next sprint for our Israeli partners. Now, that doesn't work. When you need to expand to a new region, you need to put in the work. You need to learn especially in our case, with the being in the financial industry, you need to know the local regulation. You need to understand the local market needs. It's not one person getting on a plane and hoping for the best. Expanding internationally takes a lot of resources. You need to bring in local people that are familiar with the market. So every time we try to expand globally without putting in the required resources, it didn't pan out. That's where we really came to the realization that if you want to expand, you need to go the way that's already proven. Um, Bring in the required resources and have money to burn. Actually, because expanding into a new market is a lot of trial and error, a lot of error. And you need to have that runway in order for you to be successful, or give yourself the chance to be successful.
So, tying the knot and closing the circle on the idea of bootstrapping, which is at the end, that's a really impressive thing to do, especially today. It's very tempting to just go and raise money in a world that, is filled with venture capital investors that are hungry for these success stories. And so, talking to a young entrepreneur that is now building a startup and is not even thinking about bootstrapping, what are some key considerations that you would suggest that I or my friends take into account so that we at least consider this option, which today I'm pretty sure that I'm right, that people just dismiss it from the get-go?
Definitely. I think people especially fresh out of the IDF, from technological units, they read the papers and they see company A raised 100 million, company B raised 300 million, and they're saying to themselves, well, why not me? Well, one consideration is, when you see these companies that eventually IPO or are sold for billions and billions of dollars, how much is left to the actual entrepreneurs? Because we had a few IPOs lately, and you see that the venture funds that actually invested, that venture fund made 100 million, 300 million, 400 million. The actual entrepreneurs and their share is quite small. So I think building an amazing company and putting in 8, 10, 15 years of your life needs to be worthwhile. That's an important consideration for us. Also, an entrepreneur that raised money and sold his company for $1 billion or $2 billion will probably at the end get the same amount as an entrepreneur that didn't raise money and sold his company for 100 million. Now, that's an important question to ask yourself. What are you in this for? And I would definitely advise every young entrepreneur, one, decide what you want to do, and decide how much the next 10 to 15 years of your life are worth to you. When you bring in investors, it is no longer your company. It is a shared company, and in a lot of cases, you don't get the last say. If you're going to raise money, I would wait until it is on your terms and it is a more balanced relationship. If you don't have to raise, obviously that's a situation we'd all like to be
Adam,
in.
thank you for coming and sharing your insight. The story of PayMe, I believe, is just beginning, and you're mentioning that you're putting a lot more focus on the brand and will be entertaining a financial round on your terms this time. And I think that that's a very important lesson to be learned, an important story to be told. So thank you for coming and sharing with me. I want to take you back to your childhood. What fascinated you as a kid? I have three short and fun questions. The first one is, what fascinated you as a kid?
So, entrepreneurs, always entrepreneurs. I would look at documentaries on the History Channel where you have J.P. Morgan, you have Andrew Carnegie, all those titans of industry that build
Amazing.
empires. And as someone that grew up without a lot of money, it was baffling to me how people can accumulate billions and billions of dollars in one lifetime.
Very, very cool.
So always very
And
inspired
that's
by
a
that.
great segue to today. So today, where do you derive your inspiration today?
I think books, probably. Um, there is so much knowledge out there that we as people gathered, and I think we don't take enough advantage of reading. From podcasts, obviously that bring in super smart, talented people from all over the globe, which you can learn from. You can learn from their mistakes. You can learn from their successes. You can read it in books. You can watch a documentary. You have access to all of mankind's knowledge. Take
And
advantage
what
of
are
that.
three words that you would use to describe yourself?
I would say hungry, relentless, and goal oriented.
Hungry, relentless, and goal oriented. Adam, thank you very, very much. Toda rabba. This was great. Best of luck with PayMe. I can't wait to see where this is headed and ultimately see how the strategy plays out. And I think it's an important strategy to be thinking through, especially in a crazy time like this with all the money going around. So thank you for coming and sharing your story with me. And stay safe and stay healthy. Thank you.